All my friends, Bogdan with you. Today I will tell you about the flow of orders. What is it, and how to use them correctly? This topic is very extensive, and in my trading strategy, Nightstar has a very important position. So what is the flow of orders? This is a flow of orders where there are unmitigated loss positions of a large player, and the price, of course, returns to mitigate them. But there are those flows of orders that work, and there are those that do not work. How to identify them, classify them, and trade exactly those that work. The best flow of orders for trading is a flow of orders that were formed from an underdeveloped trend of maximum and minimum, namely, from a weak maximum and minimum. If we look at the chart, for example, we have clear Haldanian points here. Minimum, maximum here. But we will not mark them now. Minimum, maximum. We have the main support points, and what we see is that in both cases they do not trade 0.5 of the range itself. These are weak key points, weak maximums. If we talk about a strong maximum, that is, minimum maximum, removal of inducement, BOSS, the rupture of the structure as a result of a declining trend. We have a new minimum, removal of inducement, and here is 0.5. The price of 0.5 is traded, and the maximum that will be confirmed here after BOSS will be strong. But here the maximums are formed, which do not exceed 0.5 and leave immediately without reaching 0.5. And usually in such ranges, the most reliable flows of orders are formed. But they have, let's say, processing time, because if the price of the formed flow of orders goes too low, then this flow of orders will be very weak for processing. In the future, when the price of it returns, it can break it. Therefore, we do not use such flows of orders. We are interested in the flow of orders that are tested immediately, and at the same time, a new inducement is removed. That is, there is also a formation of new maximums and minimums. And here we have a declining trend. We can divide these flows of orders into quarters. We will also be interested in either the second area or 0.5 itself, but not higher. 0.5 ideally should be removed by shadow. That is, all these flows of orders can be broken, divided. I usually use them on the time frame M5 together with the structure. Previously, those who tried to trade the flow of orders, they tried to trade them in such a format. When we had some kind of structure, we had a confirmed minimum, maximum. And they saw that we had some adjustments that were not traded. That is, in fact, we have a minimum here, a maximum, and a new minimum. Why? There is a minimum here because the price is removed by the inducement. And there is a minimum here because the price is removed by the inducement. That is, we have our trading range. We have a lot of orders that are not mitigated here. This flow of orders, this flow of orders, and this flow of orders, which of them to choose? Which of them to trade? Which of them will be broken? It is not clear to us. In fact, any of these zones is very weak and liquid. Because when forming, for example, this flow of orders, it did not test the previous flow of orders. Therefore, it is quite weak. And it's all just liquidity. And here is just the probability. One of the three. Where can the price work? Either here or here or here. In this situation, we clearly understand where the price will turn around. As a rule, such flows of orders are formed either before some good, solid impulse, or in some very effective trading ranges. That is, not impulsive, in which I like to trade my trading quarters. When the price is removed by the inducement, an impulsive range is formed. Here I usually pull trading quarters and trade the second quarter. Such flows of orders are not formed here. They are formed, as a rule, in such ranges. pay attention to the nature of the price movement. That is, not impulsive, but as effective as possible in terms of volume trading. That is, the most fair price. Each impulse, each trading movement with a short correction. Here there are some flows of orders, and they are immediately mitigated. And this is great. Also, similar flows of orders can be formed before the impulse. That is, we have, for example, some liquidity, some resistance zone, a compression to this zone, and soon a breakthrough. You understand that you have a secondary long trend. Here, the price removes the inducement. Before that, it did not trade 0.5, so this range will be a very good flow of orders. The price immediately tests it, the second quarter. And in this place, you just take and open the position, putting the stop loss under the absorption, and take profit. 1.5 as a rule. After that, the price impulsively goes up. This is typical of cryptocurrencies. It also works on Forex. Thank you all for watching. Like, subscribe to the channel, and please write a comment. This is very important to promote the video further. Good luck to everyone, and bye.